It's Market Day Report. We're glad you're with us as we start another trading day. Now we'll open markets in about, 16 minutes or so. And, well, before we get to the markets, let's just roll right into our first guest. It's Brian Hoops. And Brian is with Midwest Market Solutions. And, Brian, as we start our conversation, we had kind of an interesting day yesterday. And I've heard it, so it's not original, but a whipsaw Wednesday. Is that one way to look at it?
Yeah, I think it's a good way to explain it. Yeah, good morning, Tony. What I miss on Thursdays is those export numbers. That was give us a little bit of an indication of where we are at as far as our export pace for the year. Not so much on a week-to-week basis, but where we stand for the year. And without Thursday mornings, without that number, we're kind of left with what else can we talk about? What else is there to trade off of? And the corn market is one that it's probably hurt the worst by not having those export numbers because it had such a strong export pace that we were on. Now, we had a very strong weekly EIA report out yesterday that gave us some support for the corn market. And on Mondays, we do get the inspections, and they do confirm that we are on a very strong pace for corn, and wheat pace of inspections leaving the country is at a 9-year high as well. So some supportive numbers for those markets. We are looking at South American weather, which looks pretty ideal. Now it is a little bit drier right now for Argentina, and that's great for them as long as they can plant their crops and then get more rain. Now, if it stays dry, that's going to become a concern for the markets. We did have confirmation overnight of a rumor. Now, the rumor was China had bought about 2 cargoes of U.S. soft white wheat and 1 to 2 cargoes of U.S. hard red spring wheat. And it was confirmed overnight by Reuters that China has purchased 2 cargoes total, 1 cargo of soft white, 1 of hard red spring, so less than desired. And I think it just adds more skepticism to that mindset that is China going to come through and purchase what they have agreed to. We had news this week that they had bought 20 cargoes of soybeans from Brazil for December delivery. And that really, I think, left traders scratching their heads wondering, where is the U.S. purchases for December delivery? They had committed to buy 12 million tons of U.S. soybeans in November and December, and we have only a few cargoes sold. So we're looking for more business from them, and so far we haven't seen it.
Yeah, and again, yesterday we get some ethanol numbers out. That looks pretty good as we start our way into late fall and into the winter season. How important will it be for us to keep an eye when we're talking about like the biofuel side of this? How important is it to keep an eye on the energy markets?
Right. Crude oil numbers were not very supportive. They were a huge build, over 5 million barrels, and trade was actually looking for a very small drawdown. So that pushed crude oil market lower, and it's probably going to stay on the defensive through the winter months as demand starts to slow. We move from the summer blend to the winter blend. Usually we see some weakness in crude oil values from a seasonal standpoint. Yeah, we are pushing and continue to encourage producers and consumers to use a blend of ethanol in their gas tanks. It's cleaner, it's cheaper, much better for your cars. A lot of times you'll get a much better gas mileage, and that helps out the corn farmer as well because we're using a lot more crop for production of biofuels, especially corn-based ethanols. That's one area. And of course, biodiesel is such another big component that we could use a lot of soybeans through production of soy biodiesel and increase our consumption of that. Even if we don't have a lot of exports, or if we have a slow export year like we're having this year, if we have that, that's more of a constant, steady type of demand.
All right, Brian, we'll take a break here. When we come back, we'll talk about what happened and what is happening in the livestock markets. Market Day Report continues in a moment. Well, we saw, I guess you could call it a sell-off in the cattle markets yesterday. We went locked limit lower on both live and feeder cattle. That means one thing for the session today. We moved to expanded limits. For live cattle, 1075, 1375 on the feeder cattle, and there you go. You're seeing how things settled up yesterday in the live cattle market. Cash trade Texas 232. Saw some bids in Kansas for 232, but no asking prices at this point. And then sold some off in Nebraska at 230 to 230 and a half. Dress bases at 358 to 360. So that's live cattle. How about feeders? Yep, there you go. The feeders locked limit lower yesterday. And what about hogs? Well, hogs, with the exception of the December, back in the red. Brian Hoops, President, Midwest Market Solutions. What was it yesterday? Everybody I talked to seems to have a different opinion, which makes me think it was probably nothing in particular.
Well, I'm agreeing with you. It was really no news item, no tweet, nothing out of the White House or press secretary or egg secretary, anything like that. And that's what the frustrating part is for the farmer out there, the cattle producer, is why would we go limit down yesterday on virtually no news? We've lost $20 in January feeders from the high on Tuesday morning to Wednesday's close, a $20 swing in just two trading sessions on virtually no news, nothing. And the fundamentals really don't support this drop. And that's what is really frustrating. You look at December futures closing around 220, the cash trade you mentioned at 232, that's a $12 discount. Usually that's pretty friendly for the futures to narrow that discount up to the cash markets. But right now, I think you have to look at, it's the fund traders that are very long in this market, very scared of what is happening from not only a standpoint of the border opening, trade uncertainty, but also the technical situation of the market has changed. We've wiped out basically the third quarter gains. We're back to the levels that we were around middle of July. So it really puts some of these long positions that were purchased in August, September into October in jeopardy. And those are the ones that are being liquidated. So it's a long liquidation phase without really much fundamental support, not a great explanation, and doesn't help the frustrations out in the country, but it is what it is. Now, hopefully we don't open a lot lower. It looks like right now the bid ask maybe $1 in the live cattle, maybe $1.50 in the feeders. And then the question is, will they show up and sell this market again and really pound this thing again? Or do we see some sort of recovery? I would think you'll see some sort of a fundamental recovery, but when and from what price level, that's a great question because it could be very volatile again today.
Yeah, I want to take a quick glimpse at the live cattle, December live cattle contract. This is over the past 6 months. And we have, again, this pullback is pretty dramatic. But it really, when you compare where we've been, this has been a great market, has it not?
It has been a great market, absolutely. So far it has, and even this year it has been a very good market. It's just the last, month or so of futures where we've dropped from middle of October, a straight shot lower, $20, $25, without really any fundamental explanation or justification behind it. I think that's the part that has frustrated producers, especially if you've been at these sale barns buying some cattle and hoping that we would see higher prices. You really have to be feeling the pinch at this point in time based off of where the market has acted.
And then looking there at hogs, the hogs hitting their highs in late September before the pullback there. Brian, great to see you. Thanks for coming by. Brian Hoops is president of Midwest Market Solutions.